Hello, this is Eric Parnell, Chief Market Strategist from Great Valley Advisor Group, coming to you today from the Silverado Resort in Napa Valley, California, the site of the 2024 GVA VAST Conference. Well, we have an S&P 500 that's recently hit new all-time highs, but has taken a bit of a pause. And there's a good reason for that, because some of the concerns that investors had thought they'd put in the rearview mirror have started to come back again. So what are those worries? The threat of a renewed rise in inflation. Everything looked all clear when the Federal Reserve was going into their latest FOMC meeting in the middle of September, cutting interest rates by 50 basis points. But since that time, we've seen a number of factors rise to the surface that have investors worried about the potential for inflation coming back in 2025. As a result, we've seen the 10-year Treasury yield push its way back above 4% after hitting a low of 3.6% in the middle of September. So what should we as investors be watching with this renewed threat coming back to the surface? Well, the first thing is that the US stock market is doing just fine. Seeing a pause here after a recently strong run, but we still have the forces in place to see a potentially strong run through the remainder of the year. What about the bond market? It's been a big backup in yields here over the last several weeks. Taking a look from a technical perspective, we shouldn't be surprised to see the 10-year Treasury yield back up as much as 4.4%. But there we have good support, which should stop the continued rise in Treasury yields much further. However, if we do see a breakout above the 4.4% level, that means that inflation concerns have risen to a new level. So what do we watch in terms of determining how much the market is worried about inflation? One good reading is the 5-year break-even inflation rate, which gives investors a sense of how much the market is expecting in terms of average inflation over the next 5 years. Now, we've seen this number come up a lot in recent weeks since the middle of September. And if we get over 2.5%, that's also an indication that investors are becoming increasingly worried about inflation, and it might be something that's more sticky than a short-term concern. There's a lot of events that are going to be taking place in the next couple of weeks that'll give us more information on the inflation front. That includes the latest reading from the Personal Consumption Expenditures Index, as well as the upcoming election, which will give a sense of what policymakers are going to be doing, both from a fiscal policy standpoint, as well as a potential monetary policy standpoint. So we'll have a lot to work from in the next few weeks, and we'll keep you updated as we go through these events. The most important element, though, is that regardless of the concerns of inflation, the key is to stick with your long-term investment plan. We expect these different bouts of volatility and these different risks to continue to rise to the surface as we go through the remainder of the year and the coming year. Maintaining your discipline and dedication to your long-term investment plan continues to be the key to long-term success. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.